every year, we're seeing more and more money being invested into Insurtech. We're also seeing the rise of VC tourism. So VCs who have traditionally put money into other sectors, putting money into insurance. Couple all of that with the rise of IPOs, SPACs, media attention around both of those. What you're also getting is a whole new wave of entrepreneurship. But we're not talking about the 20-something-year-olds who want to set up a new company. We're talking about seasoned professionals who understand the industry and recognize the gaps in the industry to do something different. Interesting times for sure. Bring in then what else is going on outside of the market. So we've got a whole trend around embedded insurance. We've got the likes of Amazon setting up an insurance accelerator. We've got big tech moving into the space. As well as that, we're seeing those scale-ups, so those heavily capitalized, scaled startups, now on the M&A hunt. So they're now buying up the well-performing startups and bringing them into their businesses. Interesting? Definitely. And so what does this all mean for the world of insurance? So what does that mean for us as an industry? Before I dive into that, a quick introduction. So my name is Matt Connolly. I'm the founder of Sønr. For those who aren't familiar with Sønr, we are the world's #1 Insurtech scouting and open innovation platform. We track millions of companies around the world, and with that, we're able to draw trends as to where the market is going, both short-term and far-term, and we're able to help our clients. So the likes of Allianz, Bupa, Munich Re, Tokyo Marine, Hook Coburg, Vitality, and many others. We're able to help them better identify the opportunities that exist from an innovation perspective. So who can they acquire? Who can they partner with? Who can they invest into? And so on. So let's go back to topic. Whilst we've undoubtedly seen a fair bit of change over the past few years, it's nothing like what we're about to witness over the next 5 to 10 years. Now, things don't move fast in insurance. Okay, we all know that. Anybody who works in the world of insurance knows things don't move fast. And what I'm saying possibly could have been felt true maybe even 5 years ago. But what I'm absolutely sure of is in 5 years' time, there's going to be a very, very different picture. And what we are already seeing in the market and what will become more apparent over the next few years is this divergence in performance lines between those who take innovation seriously and those who don't. And I want to dig into that just a little bit over the next couple of minutes. So typically, insurtechs aren't the disruptors they were threatened to be. Yeah, and you have the Lemonades, you have the WeFoxes, you have the bought by many's for sure, and they're doing an absolute sterling job. But what most tend to be is they tend to be enablers. They tend to be able to improve certain aspects or elements of an incumbent's proposition or business operation. And so with that, the market, I believe, has reached a stage in the whole, incumbents recognize the value of Insurtech. So they don't see them as a threat, they see them as an opportunity. And the majority also recognize that the fastest route to innovation wholesale is through partnering with these Insurtechs. And they also, most, but not all, have now tried and failed and learned which is the best process for scouting innovation and bringing that into their business. And they recognize that partnership, open innovation, tends to be the most successful in doing so. And that's where Sønr comes in. So we help our clients scout for those opportunities and track those relationships through POCs and beyond. But there are also plenty of incumbents that don't do this. There are plenty of incumbents that don't recognize the need to adapt. Either they don't believe in the hype, so-called hype, or they're preparing to buy their way out of trouble at a later stage, which is a fairly standard practice across industries. Either way, it's a strategy that I don't believe will work. By doing nothing, you won't have developed the innovation muscles necessary to respond when the time requires. You simply won't know how to adapt and not at the speed that's necessary. Equally, If the plan is to buy yourself out of trouble, that also may not be so easy. As to my earlier point, those good opportunities will have already been snapped up by those highly capitalized, heavily capitalized scale-ups. And so what you're left with is you're left with those that you wouldn't normally put time and money into. If all of that comes true, then in 5 years' time, if you haven't done anything about your innovation, if you haven't looked to the market, you haven't looked for those opportunities, that you will only see the divergence between companies like yours and then those who have. Now, talking of time being limited, I appreciate my time is also limited in what I'm able to share with you today. So that's just a sense of where my head's at, where we come at things from a business. If you would like to know more about Sønr, please get in touch with me or any of my colleagues. It's Matt Connolly, Sønr. Hopefully you'll be able to find all of our details pretty straightforwardly. Thank you for your time today. I hope you enjoy this video and others that are out there.